Good afternoon, everyone. Thank you so much for joining in for the Q&A. I'll briefly just take 5 minutes to explain the opportunity again, and then we'll directly jump into question answers. So the opportunity which we have is to acquire about 35,000 square feet at Prince Info City 2. It's a grade A office space park in Chennai, very close to IT Madras and Tidal Park. We're buying the asset all in for about 27 crores, which equals to a value of about 7,000, whereas apartments in the vicinity are trading at upwards of 9,000 rupees. So clearly we are buying at a real good distressed price. We have a 3-year lock-in and a 5-year lease with a 4-year extension at the discretion of the tenants. We technically can't take them out even if they want to continue for more than 5 years. The tenant is this company called AGS, which is a 100% owned company of Bearings Private Equity, and they're one of the largest revenue cycle management company for healthcare businesses. Very focused only in the US. Just about Indian office space, no matter what, it's still a dollar market. Very lucrative for most of the IT companies to look at having offices in India. Again, access to good quality real estate along with good quality talent pool, and obviously governments have been very favoring more and more such innovations and global centers opening in India is why it's becoming a very lucrative attraction and will continue to be so for another decade, at least for that matter. So the property was completed in 2013. It's close to about an 8 lakh square feet facility, 13-story building. Current vacancy is only one floor of the building is empty as of now, but everything else is completely occupied. And that floor is also being occupied by AGS in October 2022. Location overview. So it has a lot of public transport, which is MRTS, which is the local train services from Tiruvannamayur or Taramani, from where one can come to this location very easily. Apart from that, there's a metro station which is coming. Although the metro is expected only by 2028, but that is at least what has been told, that a lot of the work is going to get preponed to ensure that they try delivering by 2026-27, because this is the IT corridor of Chennai right now, which houses more than about 20 million square feet of office space and occupies most of the large IT companies from TCS, Infosys, etc. also at the same time. Like I said, the tenant, it's owned by Bearings Private Equity. They had acquired this company for $320 million in 2019. In today's term, might be a $400-500 million transaction, basis the dollar price. But company is doing substantially well. Post that has 10,000 employees. More or less, everyone is in Chennai. As well, the company has close to 4 offices across in Chennai itself, and now looking at consolidating in one building is what we've been told as well. So the entry yield is about 9.1 with the top up. Price which we're acquiring is very lucrative, which is why we see a good upside in future. We're buying this property from a fund called New Entron, which has LPs such as Harvard Endowment Fund and multiple other premier LPs who are investors. So they've seen this asset from a pedigree standpoint. They bought this asset in 2015, and because of the fund duration ends in 7 years, they're exiting the property as of today. There's a metro which is upcoming, which obviously will bump up pricing in future, but at least that's another 5 years away before we'll see the light of the day of the metro as such. So 25 lakhs is the minimum. Our women quota is more or less full. For women investors for 15 lakh rupee investments. There's a 1% top up, a standard 1% management fee, and 20% performance fee over a hurdle rate of that. So that's a quick 5 minutes about the opportunity. Happy to take Q&As from people. Feel free to write the Q&As in the question answers tab, and we'll happily answer all your questions as such. Okay, we have a question. Is this a registered lease? Yes, so the tenant actually signed the lease in April. They've been doing the fit outs, and so when we had seen the property in, I think about May or June, the fit outs just started commencing at that given point of time, and now the fit outs are near to completion. You can see in the memorandum as well, about how the fit outs, have been carried on, etc. So accordingly, we see the tenant stickiness very high. In fact, AGS has 2 floors in this building, and they're taking a third one. The floor above, which is the 5th floor, occupies their back office, which for 35,000 square feet, they have 500 people working, which means a density ratio of 70 square feet per person. Whereas on this floor, which is 35,000, only 220 staff are going to stay, which means a density of 150 square feet per person. So in true sense, this is their corporate headquarters. This is where the heads of the organizations are going to sit. And hence you see such premium, high quality fit outs the tenant has carried on in this property as such. Great. Can you please tell me the capital appreciation here? Yes. So pricing in this market is today in the range of 8 to 9,000 rupees per square feet. We've given investors access to the valuation report. If you don't have it, please let us know and we'll circulate the valuation report which we have obtained from JLL as well for this particular opportunity before we acquired. So clearly we are already in the green from the time we acquired the property, and at least with the metro coming in, even if we conservatively foresee a 7,000 rupee becoming 10,000 rupees for that matter in 7 years, we're talking about a close to 6 to 7% yearly appreciation on this particular property, right? So even if it's 9,500, which is just about 10% more than our current market trending price as such, I think we will be able to achieve the targeted IRR which we have put forth in our presentation as a summary also at the same time. So yeah, so that's just to give you a little glimpse of it. I'll probably even take you guys through the valuation report which we have from JLL. So the valuation which we received from them is close to about 29.8, which is 30 crores, and we are acquiring for about 25.5, 25.6 as a thing, pre-acquisition fee, etc. altogether. So clearly from that standpoint, we are buying at 10% discount to what it is. But there's a detailed report in case anybody needs, it's there on the dashboard. In case you want, let us know. This is how the rental trends have been. 51, 52 rupees were the rental trends back in 2014. We are at 52 rupees now, whereas the building average rent is about 60, 65. And this is the kind of pricing which is going in the market, and we are buying for 7,000, 7,200, right? So clearly we see a tremendous upside, and how the market has grown at CAGR 6% year on year. 34% growth since 2014 is why we were very pumped and bullish about the capital value at which we are buying. How does the performance fee work? Is in the rental fixed? Yes. So performance fee is only if you make capital appreciation, and if you make over and above a certain benchmark of 10% IRR, is only then it comes. It's without catch up, which means you need to make minimum 10% return. And anything over and above that, let's say you made 11, then we take 0.2% as a fee for getting you a best deal and incentivizing us for ensuring we give you the best returns for your investment as well. All right. Can you please share details about the downside risk associated with this investment opportunity? So there are 4 risks at any given point of time, and we're very vocal about all the risks which are associated in our previous opportunities as well. So risk number 1 is, let's say, the real estate risk. This is a grade A office. They have tenants like Tata Teleservices, which owns its facilities, Olam, IBM, ProAdapt, BirlaSoft, and AGS right now. So these are all premium tenants. Obviously, everyone has gone through their legal due diligence before they have acquired the particular property as well for leasing. Is why we see that at least the real estate risk is low, and we obviously have taken the valuation report as well. And like I said, we're buying from a very, very tier 1 fund who's exiting its portfolio because of its tenure duration or the maturity of the fund, backed by Harvard Endowment, etc. So yeah, so that's on the real estate risk. Second, on the tenancy risk, so the tenant, like I said, is investing heavily in the new fit outs, which is exciting to understand the stickiness of the tenant on a longer duration. That's number 1. Second, it's a fresh lock-in lease in these durations. That's another thing which at least ensures us that the tenancy risk, at least for 3 to 5 years, is not there. And that's the time when metro would be near completion, would give us a great opportunity for us to flip at a better price in future. So as an exit mechanism, we look at 5-year as a great horizon, because if the tenant is renewing the 4-year clause which they have for other thing, I think it's the best time for us to look at exiting, because the metro will also be near completion for us to actually make the capital appreciation value at that given time. Third risk is liquidity risk. Obviously, see, this is for investors who have a 5 to 7 year investment mindset, and real estate in general is not that liquid. However, we've created a lot of liquidity windows for investors, but if you don't have that that mindset to hold on to this investment, or that part of wallet share which you're okay to kept being invested for 5 to 7 years, I don't think so. This is meant for you, and look at other opportunities, but not real estate in general in any form. And in general, the other risk which relates is regulatory. If tomorrow Metro decides not to happen, or any other thing which is market risk, for that matter, is a risk which it's not us, it's the entire market which will have the entire risk associated with it. But these are prima facie the risks which are associated with the building. What was the exit IRR for the LP exiting the property? Any figures that you can provide on the valuation? It seems attractive. Yes, absolutely. In fact, we've gone through that. So they've acquired the property at about 5,000 rupees per square feet, and they're exiting at about 7,000. So in 7 years duration, they have made close to 6 to 6.5% in terms of yearly appreciation. However, this particular fund has taken an LRD on the property, which means their IRRs have been a little better than 6% because of the leverage which they were able to generate out of this investment. But yeah, that's the return they've made, and we are seeing on par with what we could also make for our investors. All right. What will happen to money after tenant will move from the property? Will I receive in writing after investment? I didn't understand this question, but yeah, if the tenant leaves till a new tenant comes, we don't, obviously we are not paying the rents. The tenant pays the rent. We are asset managers. We just distribute the rents to you on a month-on-month basis. And hence, from that standpoint, this is where we are from an investment standpoint, that we are asset managers and we handle, and it's our job, because our fee also stops in terms of our management fee for managing your entire investments. It's our incentive to find another tenant for a particular property and then go about investing. What is the rate per square feet for this transaction, and what is the comparable transaction recently? So we've shared that in our investment memo. You can go through that. You'll get an idea. The valuation report also gives you the entire, idea about what is the capital value, etc. What have been the trends in the past in the same thing. What is the financial guarantee backing the lock-in period for the tenant? I think lock-in is a proven concept as per law, and this is a large corporate private equity owned company. Corporate governance is of its top priority at any given point of time, and we definitely don't see them defaulting on rents at any given point of time. Who's investing in the fit outs? The tenant is investing in the fit outs. To what we've been told, it's close to about 3,000 rupees per square feet, what they have invested in the fit outs. Great. We have a question from Mr. Suyash. What if I want to sell my investment after 3 years? What is the process? So again, for this particular thing, we would recommend a 5 years. If you have a 3 year, please don't consider this investment. There might be other opportunities which we can bring on board, which you can consider, but this is not a 3 year investment, which I would definitely recommend. This is a 4.5, 5 year bare minimum for the lease to end, for the renewal to happen, for the metro to be near completion, for us to then look at exiting at a higher capital value as such, but not 3 years, definitely not. But otherwise, process is simple. A new buyer comes in, we do a share transfer. You don't have to come anywhere. You can stay at home, just sign the documents on DocuSign, and the share transfer would be done and the money would be reimbursed to you. Great. How do you get the property at a lower than market rate prevailing in the area? Any specific reason? Yeah, in fact, ever since the whole rate hike has started in the market, we've been a little more opportunistic and wanting to look at assets which are generating at least 8.5 in terms of returns, because LRD rates are also at about 8.2% today. And all the funds who understand the real financial value of assets are able to do. And today, fortunately, because of all the investors and the amount of commitment they've shown to us, we've been able to acquire properties in less than a week or two, right? So many sellers are also saying, instead of me finding several other buyers, even if it's 5% at a discount than what I can get in the market, I rather go with Strata as an example, who has the ability to close the transaction and has delivered consistently. This is our 16th property. We've consistently successfully funded all our 16 properties. So a lot of these sellers are also seeing, and this is exactly proves our thesis that the more and more we buy, the better pricing we'll keep getting for our investors on a regular basis, and ensure we get the price that even if you negotiate versus us, we know outright we'll beat you guys from a negotiation standpoint, just because of the sheer amount of AUM we've been able to create for our investors, which allows us a great bargaining power in terms of the property price at which we acquire. So this definitely has become one of the clear reasons why we've been able to acquire properties at a lucrative. Like our Pune property, which we acquired, was again at a substantial discount to what market price was, and investors are making a substantial return in that particular property as well. Great. Why would such an experienced PE player make a distress sale? Ideally, they would be planned to get multiple competitive quotes. Well, they are. It's a 25 crore opportunity. You cannot get a large fund to acquire a 25 crore opportunity as such. It's a very small transaction for them. So the fund owns most of the properties in this duration. So a lot of the title park, multiple properties in the vicinity. They had a clear thesis of Chennai as a market back in 2014 when they started investing till 2015 when they deployed all their funds, is what it is. But a fund always has a duration when they want to exit and they look at exiting. It doesn't make a difference who comes in at a price. Typically, you can consider it's a distress sale, but for them, they had certain IRR expectations that they made, and they want money at the pace at which we can deliver. They make a call instead of haggling around finding multiple HNIs who can do it. In fact, I remember one of our investors who has invested now already, told, I was evaluating on the property, and before I could say yes, I got to know that they are already signed with you. And obviously, we have certain relationships with these funds as well, which allows us to pick up these kind of properties, as a preference over just another individual who will want to consider buying. Great. Has a legal expert checked the building and property rights? Yes, absolutely. So we have a legal opinion report. Happy to circulate that to you if you want to review on the title opinion of that particular property as such. Great. When the current lease gets over, how soon new tenant will occupy the office? I mean, what will be the maximum time to occupy tenants? Typically, I think you should expect a 3 to 6 months duration on an average before we identify a new tenant. It cannot happen tomorrow morning as such, but a 3 to 6 months duration is a conservative before rent commencement starts, because let's say even if you identify a tenant within a month, he might have to do 2 months of fit outs or whatever entry period in terms of upgrading the property before he moves in. That's how it is. But looking at this tenant who's consolidating and taking more space, and other tenants like IBM has 6 floors, Olab has 3. Anybody who wants to expand its businesses, and you've seen the trends, right, of how IT companies are only expanding the amount of people they have in the company. This office gives them an opportunity, because if there's any tenant leaving, we know there are 3 other tenants who are looking for office space as well in the same premises. It makes an ecosystem for them to stick around as well. Great. Please talk to us about 200-acre garbage dumping area which has been reclaimed and converted to green belt. Sorry, sir, I'm not aware of this, but I know which you're talking about in Peramgudi, which is there, but this is very, very far from our property as such. And these are initiatives the government is taking, because earlier when these garbage dumping areas used to be, which was outside the city, but is now city property, is why they're converting and making as green as possible. You've seen how Tamil Nadu government has even reformed the whole Marina Beach to what it used to be to what it is right now. That's the pretty much the entire thing. So all these things creates the ecosystem which helps us have better value appreciation over a period of time. Otherwise that can be a deterrent as such, but that's a positive thing. But that has already been done in over almost 6 months back, at least that from a government announcement standpoint. Great. I am an existing investor and I can see performance fee being changed compared to what I've seen with the older investment. Can you explain why? So as a company, we need to look at sustaining ourselves as well. Earlier, it used to be at a 10% CAGR. Now it's at 10% IRR. It's going to be like this going forward for all our assets. Again, it's only to ensure that we are also incentivized and we are aligned to ensure we create maximum returns for you and for ourselves in the end of the day. But again, please remember, if you made a 14% return overall, we only would charge you about 0.6% as fee for taking care of the entire thing at the end of the day. This is post management fee, post everything put together, right? So end of the day, that's still substantial. Our fee is going to be sub 5% of your overall return, only provided we make you that minimum 10% post management fee returns for your investment. All right. Great. We have a question. One risk we see is every time is lack of clarity on exit option. Is there a plan of creation reselling platform? We have a resale platform, and to your surprise, we've done a resale of close to over 30 people already, and most of the exits happened during the second pandemic wave and the third pandemic wave. And people wanting money at that, which is why we're very vocal to people that hey, this is a 5-year investment mindset. So if people who come for a year or year and a half, ideally, why are you investing with us? It's of no use because you're only going to generate capital rental returns. Capital appreciation as a concept is a 5-year investment hold period. It doesn't, your property doesn't jump up overnight. You can be fortunate if a metro gets announced outside your property after you buy the property as such. And there are certain opportunities that way, but not 9 out of 10 properties are not going to go through that window, or even sellers are smart. They're not going to sell it very, very cheap also at the same time, right? So need to understand that we do have a resale thing. We've facilitated exits to the tune of 10 crores already for people, and I have testimonials from all our investors of how soon we could do the reselling for them. Happy to circulate that to you guys anytime you want. All right. Any alternative opportunities looked into where interest on security deposit can be invested, which can't be put in Sharia compliant as highlighted in the last webinar? Yes, sir. So we've been working with Thesis, TASIS, as an organization which does the Sharia compliance. So the only opportunity we see is a Tata Ethical Mutual Fund as an opportunity which is a compliant Sharia compliant. So we've been working on that. Once we get clarity on the exact returns, how it goes, I think we completely become a Sharia compliant product in itself. So probably, why we've been hesitant is we want 100% clarity on everything, because we don't want to enter something and then, we eventually violate any of the Sharia rules, which eventually becomes a human cry issue for investors who want to follow the rules and regulations of that. Hence, we are trying to go through each and everything before and test it as well with a couple of investors who are a little flexible before we roll it out as a proper Sharia audit, Sharia property as such. Who will pay property tax and maintenance? So maintenance is paid by the tenant directly. Property tax, we take care for this particular property as such. Okay. Any special offer for first-time women investors, like reduction in minimum to 15 lakhs? Yes, it is. For 15 lakhs is what women investors can invest. Ideally, this was started on our Women's Day as a campaign, because what we realized on our platform was 97% of our investors were men, and we wanted a more financial inclusion. So hence, we reduced the ticket size to 15 lakhs and trying to create more women literacy, which also ensures that they are financially independent as well, is why we made it 15 lakhs for women investors. But that's, mind you, it's only for their first investment. For the second investment, it's still 25 lakhs for the women investor. All right. For the 25 lakh rupee investment, what is the security I can expect as an investor? So you get share certificates for that particular opportunity. Like for instance, this is owned by a fund. Like I said, there's already an SPV. So we're just picking up the shares of the SPV. So you'll get the share certificates of the SPV as such. Again, the details of the SPV, etc., is all available on the Google Drive folder. If you don't have access, please write to us at hello@strataprop, and we will revert back to you with the link, or you can talk to your investment manager and he'll give you the link where you can go through everything, even bank statements, etc. If you want access to of the SPV, feel free to write to us. We'll give you all the assets as such. Have you faced any issues in previous projects? Yes and no. Most of the issues which are there have been resolved. So one issue was during our second investment which we had done, which was a warehouse in Hosur back in 2020. Because of the pandemic, obviously labors were not coming and the delivery got delayed by a month. But that's pretty much the issue. And, tenants sometimes, because of some changeover in finance or whatever, have delayed rents by 3 days or a week at max. So that has been certain issues, but not anything which is major where anything has happened in any of our assets for our investors as such. Please understand, it's not our projects. We are not developers. We are asset managers for you. We take care of asset management as such. And, we don't guarantee or take care of, it's our responsibility to take care of things, but we don't guarantee anything which can go right or wrong. We take care of all the risk mitigants to ensure you as investors, are safeguarded from any things which could happen. Versus if you had to do directly versus us, we know for a fact this is our business and we'll do a little better job than in general a normal individual person would do as such. How old is the property? Is the rent at par from the market? Property is about 2013 constructed, so nearly about 9 years old right now. How is it on par with the market? Market rents are about 60, 62. Certain assets which are brand new are getting upwards of 80, 90 rupees, like the World Trade Center right opposite, which Amazon has leased, is about 90 rupees as such. Our rents are at 52. Which is great, because if it was 60, we had to pay a little premium in terms of capital value as well, which is why we are at green from day one from an investment standpoint. Is there any lock-in for an investor? Yes, it's 6 months only. But again, reiterating, if you don't have a 5-year investment mindset, please do not consider investing on a platform, because none of our opportunities are for short-term investment returns. As such, there are multiple products outside, which you can look at for a short-term investment mindset. Taxation on TDS on rentals, yes, sir. So we would be deducting 10% TDS on your investment returns, unless you give us your Form 15GH as such. Then we would not deduct TDS or have a lower TDS reduction, especially even for NRIs. If you give us your TRC, then accordingly the TDS rates would differ for you as investors, but otherwise we have to deduct as per law and then distribute to you on a month. But at the SPU level, the tenant, when they deduct, we apply for low withholding certificates, which allows us to ensure that everything gets flown to you. Likewise, even a fee we get flown to us on a regular basis. Great. What is your plan after 9 years, or rather when the tenant vacates? I think a better exit mechanism for this is a 5-year investment duration. 9 years is a call, obviously, is at the hands of the investor if they want to stay invested. But in my opinion, a 5-year is a good hold period for this particular property, and not to be done beyond that. Again, subject to how market responses at that given point of time, we can take a call and advise investors what is the best thing to do at that given point of time. But prima facie today, 5 years is the duration we should look at exiting this particular property. Great. Once payment is done, how much time it takes for share transfer? So right now we're just taking the 10%. Once we get the 100% commitment, we are right now about close to about 55-60% funded. So once we are 100% funded is when we do the drawdown, where you transfer the balance money, and share transfer happens within a week, because not everybody transfers on the same day. So people who transfer till the last transfer, from the last transfer, it typically should not take us more than 3 days to do the share transfer, get the share certificates in your name, and then pro rata rent start distributing to us as well. All right. How different are you from other platforms in the market? Very important question, and very important. See, it's not just the property which you're buying into. You're buying into the asset manager's capability as well. So that's very, very important. So please look at track record, the assets they bought. What are the kind of IRRs they have shown to what they are able to achieve as well. We've been very conservative for all our investments to showing IRRs not more than 12-13%. There are platforms which show 20-30% IRRs as well. In realistic world, it is unachievable at all. So it's very important for you to review everything. Again, also look at the investors who funded such companies, again, to understand, because again, like I said, this is not a broking platform where, hey, you sell investors and property and you're done. Our work starts after the property is acquired, because that's when we do asset management, take care of tenancy management, property tax, insurance, and rent collection, rent distribution, etc. There's a whole lot of asset management which comes post acquisition, and that's when we tell our investors that my work starts after we acquire a property, not till the property is acquired as such. That's the most easiest task at the end of the day. So yeah, but that's how it is. So it's very important to you. Again, when I said look at the investors, today when you have investors like Kotak, etc., who back us, we keep getting guided on how to go about what are the pitfalls and downfalls working with certain developers, etc., because from a banking standpoint they get access to what's happening as such, and we take proactive measures to ensure we don't end up making such mistakes as such. Great. Any Pune opportunity shortly? Yes, we are evaluating a couple of opportunities right now. Maybe another month or two, we should have something in Pune very exciting, which we're working on. As such, in fact, for the investors who invested in a existing Pune opportunity, which we did prior to this, are going to see a great upside in terms of returns, because we've got another tenant who wants to take up another floor. So we're now going back to our investors and saying, hey, we want to construct another floor, which will enhance our investors' returns from 8.5 to close to 11% in terms of rental returns and a 9-year lock-in with a tenant. So, we've been very fortunate. Our team was working with a couple of tenants who were looking at, we wanted to use the FSI. We're very fortunate to use that, and existing investors of that opportunity would make substantial returns as such. We'll make that case study and share it to you what we did so that you're aware of what we could do as well in terms of our asset management capabilities as such. We have a question from Mr. Goswami. This being a 2030 property, do you think appreciation of 6% is realistic? Yes, it is. Ideally, we would consider only 4 to 5%, but considering we're buying at a substantial 5, 10%, 15% discount at the market, that is something with 4, 5% year on year, we can hit 6% as such. But conservatively, even at 4%, we'll make 11, 11.5, 12% as IRR returns for ourselves. So keep anything from 4 to 6 as an average return. We're targeting 6, but 4 to 6 is realistically what is achievable as such. Great. Your view on Chennai versus other markets. Strata has invested in Hyderabad, Pune, Bangalore. So I'll give you a couple of insights. Chennai especially is catching up a lot. A lot of RFPs are catching up in Chennai more aggressively right now. In fact, all the national developers are now in Chennai constructing large facilities. RMZ is building close to 2 million. L&T is now building 2 million. DLF as of now is building an initial 4 million. Embassy just finished another 1.5, 2 million square feet facility. So Brigade built the World Trade Center, which was another 1 million square feet of office space, which Amazon recently has taken. So a lot of traction is going in Chennai. Again, 2, 3 reasons. Government is very favorable right now, and we see this government getting extended for another term very, very easily. Second is low attrition. Chennai as a market, you've seen, people in Chennai work in the same company for 10, 20 years. Loyalty is very, very high, unlike Bangalore, Hyderabad, etc. Also at the same time. So that's another thing. Downfalls are, it's a little more conservative society versus a Bangalore, which is very, very open, which is, you see yesterday's news itself, where the Tamil Nadu government announced liberalizing alcohol industry, right? Because that has been one of the biggest deterrent for a lot of IT companies to look at playing. And believe it or not, it's a real big thing because of how everything is controlled by the Tamil Nadu government. The anti-alcohol, you don't get all the new alcohol. It's still Kingfisher, etc. At the same time, as simple as it may sound, trust me, it's one of those real important decision makers for occupiers to consider that, hey, how is the ecosystem being built for their employees to have fun post office hours as well? Is the ecosystem a little more open, or is it still a conservative society as well, right? So, steps have been taken to make it a more open ecosystem to how Bombay, Pune, Bangalore, Hyderabad, Gurgaon, etc. is. Tamil Nadu, I think, was left behind, but it's now catching up. But again, it has its own merits for being conservative and for tenants to look at occupying properties and getting that kind of talent pool also at the same time. You see all the large SaaS companies have not moved out of Chennai at all, whether it's Freshworks, Zoho, multiple other companies still operating and their companies and employees have been working in the organization for 10, 15 years, which is a rare sight today in a Bangalore market, right? But having said that, Bangalore, Pune, Hyderabad also has its own edge because the ecosystem is already built here. It's taken 15 years for them to build this large ecosystem, getting talent pool, the weather, multiple other parameters, which is there. But Chennai is not behind. And people would look at having a balance between these 3 markets, either from a business continuity management or in general to diversify their risk across different markets as well. Great. How many years it's under your organization as such? So our company is 2.5 years old right now. We manage close to 750 crores in terms of AUM right now, spread across 16 assets, including this. We have diversified our investors. We have, I think, about 6 investors who we literally invested in all our properties. Now, in true sense, that's diversification because they've now bought a factory leased to Wipro's company called Microplastics. They've bought a warehouse. They bought a life sciences building, they bought a retail, they bought office spaces, and they've invested not just in these different asset classes, but in 5 different markets, right? From Bangalore to Hosur to Chennai to Hyderabad to Pune to Bombay and Jaipur as well, right? So, in true sense, that's what we want to create as a diversification platform for investors, and that's what we are creating as such. Is there any share of Strata in the property? No, we don't invest in any of our properties as such. We find that to be clear conflict, and hence we don't invest in any of our properties as such. Okay, very interesting question. Can there be an option created in Strata where instead of money getting credited in the bank account, it can be placed in Strata wallet where I can use it for future investments? So we know this. Many investors have come forward to us and even asked us that can you create these kind of liquid funds plugins where the rent directly goes into a liquid fund and I use that money to buy another opportunity as such. Unfortunately, the laws for the investments in capital markets have been very different. You have to move the money back to the source account and only then you should invest as such. And that's been a little challenge, but we are trying to work on this whole wallet share kind of thing. But then we are trying to see if you're parking money in the wallet, can we still generate rents or interest or fixed deposit interest, whatever it is for that matter, or something, and we don't keep your money idle. It's something we're working on. Again, there are certain challenges from RBI which we need to figure out how to solve for. And the minute we solve for, I think we would start doing it. But we're working on the whole wallet mechanism, which ensures you can do it. But the whole idea is we want our investors to make money at any given point of time and not keep their money idle with us. And hence, we are trying to work out on something which we can do it. But, I mean, thanks to people like y'all, Mr. Syed, which, keeps us engaged on how proactively we should only keep focusing on making more and more money for our clients. So we are very, very actively working on that to ensure we keep focusing on doing it. Great. 15 lakh rupee investment for women percentage should be increased compared to what we have. It was really good initiative. Thanks to the good work you're doing. Thank you, Mr. Raju. I mean, the whole idea is more financial inclusion, like I said, but we have certain limitations because we can have only 200 investors in an SPV. So if it's a 50 crore opportunity, I cannot have more than 10 because I need to hope that certain investors who invest 50 lakhs, it gets subsides with them. And that's the reason why we have a cap. Otherwise, we have no problem at all to keep 15 lakh as a minimum benchmark for everyone. Why only women as such, right? So there's a rationale why 25 as kept. Otherwise, absolutely there's no concern at all. Great. Any lease rental discounting support that you plan to provide? So believe it or not, we delayed listing this asset by close to a week prima facie because we wanted to do this as an LRD asset. But what happened was the rising rate of interest which we're seeing right now, which is very, very difficult for us to understand what is happening, is why we have not gone into LRD for this particular property. But very soon we would roll out an LRD product for investors for them to go about doing it. Is AGS rated by credit rating agencies? People get confused. There's a listed company called AGS Transact. That's a A-rated company as well, but that's not this company. That's a cash management company. This is a revenue cycle company. This is a wholly owned subsidiary of an American company as such. Credit rating comes in only when a company is looking at raising debt. They work on the whole approach, right? How American companies work with their subsidiaries in India. It's where the service agreement and it's cost plus 15% or cost plus 20% as a markup, and they declare profit. So the question of taking loan by a subsidiary whose only job is to service the parent company whose entire business in America, it doesn't make sense for them to take any loan, and hence credit rating won't happen as such, right? So hence there's no credit rating, at least in India. I can still verify credit rating of this company in the US and I can get back to you with the details. But having said that, 100% owned by Barings Private Equity, which is a very, very large private equity fund. We don't foresee any such credit rating issues, at least for that matter. What is 1% rental top up? Is it different from rental escalation? Yes, it is different. The whole idea of rental top up is many of our investors commit early, and sometimes it takes 2, 3, 4 weeks for us to get at 100% commitment, and only then we deploy money and do the drawdown and acquire the property. But investors give 100% or give 10% of their money, and their money is sitting idle. So this is ideally for people to incentivize them who have committed early to get something paid. Like this top up for this particular opportunity ends on 8th or the 10th of August, if I'm not wrong. So those who commit after 10th, they don't get the top up. And hence, so that's the whole reason of this is again after the feedback we've got from a lot of our investors that, hey, I commit early, and then, someone who's committing after, let's say, 3 weeks, why is there the same returns for them, right? So hence we have this top up so that we incentivize people who commit early and their money is not idle. Like I said, we need to ensure we don't keep money idle for any investors on a platform, and our only objective is to make money for our investors. Great. We have a question from Mr. Nishant. What if the developer backs out once 100% funded? Uh, we've known something like this has happened in the market recently where a developer backed out once 100% funded. There are a lot to it. You need to understand why a developer can have the right to back out. I'm a lawyer. I've been into property litigation. I really know how to cover our interests at any given point of time. But if there are commitments of timelines of delivery of in terms of you making the payment, etc., it can be 30, 60 days, whatever. If you don't, then the developer has the right to back out because you can't do anything again because you signed for a commitment of a duration of a term sheet that I'll give you the money in 60 days or 30 days or whatever, right? Like even in this particular property, if we don't fund the asset in 60 days and disburse the money, then the developer has the right to back out at any given point of time. So what we do as proactive measures in the event if things get delayed, we go back and renew the term sheet and take another 60 for any reasons so that before I call for 100% and we foresee this can happen, we ensure we've covered our interest and only then call for 100% because we, again, like I said, our interest is to not ensure your money is idle with us at any given point of time. We need to, at least in the system, it's very clear the minute investors deploy money, the meter is down. Investors need to get paid every day. And that's how we operate from a business standpoint. We have a question from Mr. Siddharth. Is there a cash component that an investor can consider investing? Absolutely not. It's completely online. There's no question of cash at any given point of time or in the future this will ever happen on our platform. In how many projects your targeted IRR has been met? Please let us know your percent-wise. So again, all our investments are 2 years old. Like I said, IRR is a function of capital appreciation as well. And it's only 3 years from now where I can give you actually what we met versus that. Again, we're very, very conservative. Again, like I said, people will promise you 8, 10, 20% kind of growth every year. Trust me, in real estate, it doesn't happen anymore. There can be few properties, but not all. 4 to 5, 6%. Top 7% is what you should achieve. Anything beyond that, you need to just understand your stars are very, very bright for you if you made that returns. Otherwise, in realistic world, without leverage, making those capital appreciation doesn't happen anymore. Okay. So breakup of the rent receivables. So rent receivables are only two. It's rent and interest and security deposit. These are the only two things which are getting that. Is there any LLP or private limited where share percentage reflects in any government official website? Yes, absolutely. It's a private limited company. You can go on Ministry of Corporate Affairs, put the company's name, download the public records. You'll know obviously list of all the other investors who are invested with you as well, and what is your overall percentage. But otherwise, when we will anyway circulate to you the cap table, so you would know who the other investors and what's your percentage holding in this particular company. Great. Is there a referral module at Strata? How can I benefit existing investors by referring? So we are rolling out an existing referral policy next month for, I think we've built an entire thing. Again, we've got a lot of investors who have been evangelists for us itself, who've come forward and got their friends and families invested. So we've created this module for them. It's going to get rolled out next month, and then you can refer so that there's some incentive to you in terms of, management fee waived off on your existing investments. And for your investors who are, or your friends who are investing will also get their first year management fee waive off as well, right? So that's what, and multiple things which we're working on, which will roll out very, very soon for investors. Again, this is thanks to feedback from people where we've been able to create a referral policy as well. Guys, so in the interest of time, we thought we'll just keep a half-an-hour webinar. It's Saturday for people. It might be working, might be holiday, but we didn't want to take away a lot of your time. But having said that, thank you so much for joining in. I'll just take a couple of last questions because there's a lot more questions to answer. And in case you still have any further questions, feel free to write to us at hello@strataprop.com and we will answer, or reach out to your investment manager and we'll answer all your questions. Great. We have a question: who will be the directors of the SPV? How do you ensure smooth relationship between your team and the directors? So these are independent directors. We have a trusteeship company which appoints them as directors. We are not ourselves, or our teams are not directors. It's again clear conflict as such, and hence we don't become directors at any given point of time. In terms of smooth relationships, it's a professional organization who are directors for upwards of 4,000 companies in India right now, and that's their business on a regular basis. They manage close to 5 lakh crores in India in terms of the asset value. They are directors for most of these funds as well for their SPV. So we appoint the same and we pay them, fee from the management fee which we charge you. We take care of that and we pay them. So there's nothing on top of that which we charge to investors as such. In terms of smooth relationships, again, the professionals, their only job is to oversee what the entire function of the entire business is being operated, that the rents which has been which have been collected, have they been distributed pro rata to the investors? Has the TDS been paid? Has the GST been remitted? We have a quarterly reviews with them for all our SPVs to ensure that there's smooth functioning at any point. Is there an investor forum asset-wise? Yes, we are creating one. It takes some time because it's obviously a very, very large tech piece to do it, but we're creating this investor forum. Again, we don't want our investors to get spammed as well. So we're trying to create this thing to ensure that, there is an ecosystem built, and, investors, co-investors can even advise people when probably is the right time for one to exit a particular property, etc., also at the same time. So we're creating that. Should be live in another quarter or two. Again, a lot of our time and energy went into creating the mobile application which we have right now, and likewise trying to create the whole experience seamless for you and ensure you have a great experience investing with us. But yeah, guys, thank you so much all for joining. I hope this was fruitful for you to take an investment decision. If you still have any further queries, please write to us at hello@strata.prop or reach out to your investment manager and we'll happily answer all your queries. Thank you so much, everyone. Have a great weekend.